Congratulations, you've finished university, you've finished college, you're starting your first job, and your salary is $60,000. Here's the bad news, you're about to give $17,000 to the government. Do you really want to give $17,000? Actually, $17,790. If we want to really split hairs, that's the amount of money you're going to lose this year if you don't take these simple steps. Okay, so I know it's a cliche. Everyone has said you need to invest more when you're young. And I'm here to try to be another voice to compel people to do that. Here's your ticket. It is the retirement savings plan, the registered retirement savings plan in Canada. For those folks that are living in Canada, I want to go through it very, very quickly. People will say this is a tax deferral. I find that kind of confusing. It's an income deferral. Let's just cut to the basics. If you're making $60,000 a year, you are paying 29.65% of your income to the government. Split between, now I'm using Ontario and federal, split between the province of Ontario and the federal government. You're giving almost 30% of your income. I mean, that's crazy. And we all know we're in a socialist state. But man, oh man, if you can find a way to reduce that, how important is it? 60 grand, you're dropping over $17,000 in tax every year. That's hard to accept. Here's the thing. Every dollar you put into a registered retirement savings plan will reduce your income for the year. So let's say you've finished the year, you're doing your taxes, you're sitting around, you're doing this before the March 1st deadline for RRSP contributions. It's February 15th, you've got your T4s from your company, and you've got it all set in there, and you realize you've already paid the $17,790, I think it is. You've set that, it's done, it's gone, you're hoping for a tax return. You do your taxes, you've got your prepared software, or you're working with an accountant, and your tax return is zero. You don't owe anything, but you're not getting anything back. Now, if you put a simple amount like $2,500 into this RRSP contribution before the March 1st deadline, okay? You can contribute January and February of the future tax year. So in this case, it would be the future tax year because the income year was January to December 31st the year before. If you put in a simple amount, say $2,500, that will reduce your income from $60,000 to $57,500. Now you are going to be taxed on that $57,500 instead of the $60,000, but guess what? You are already taxed on that $60,000. If your tax rate is 29.65% on $60,000, that $2,500 that you contribute, you're going to get 29.65% back instantly on your tax return. That's about $741. Here's the fun thing. I don't know how you can turn $2,500 into $3,241 so quickly, because that's what you just did. You took $2,500, you put it into an investment, your money, and the government gives you back another $741. Here's the fun thing. How about if you put that $741 also into an RRSP? Now your tax return increases by another $220. Then you can take that $220 and put it in an RRSP, and that tax return increases you by another $65. And you can keep doing this. But essentially what you're doing is you're reducing your taxable income. You are retaining that tax money. You're keeping it from the government. Now you get to invest that money until you retire or until you pull it out. But it's there, it's yours, it's not sitting with the government to do what they want with, it's sitting with you so that you can do what you want with it. So that's the basics, okay? Put a little bit in, it reduces your taxable income. By the way, you've already been taxed on that income, so you get the tax back on the amount that you reduce, and that goes in your tax return. You can just take that cash if you want to and use it for any purposes, but if you roll that back in instantly, you keep dropping your taxable income. Last thing to remember, everyone has a limit. It's 18% of your income from the prior year. Here's the fun thing. If you've never done any RRSPs, every tax year that you have filed with the CRA, you have 18% of that income accumulating. Look at your notice of assessment. It'll tell you your RRSP contribution limit, and you can max up to that. So I hope this little tip helps you. Best of luck in your investing. Thanks for watching. If you enjoyed the video, hit the like button. If you want to see more videos like this, subscribe to our channel and hit the bell icon to be notified of our latest videos.